My name is Patrick Murcia, and I am the Director of Community Development for the Western Region for Fannie Mae. I want to thank Congresswoman Speier and Supervisor Chu for sponsoring this important event and for inviting me here to speak here today. Also, to echo the Congresswoman, I want to thank all the bank servicers and counselors who took time today to be here. But most important, I really want to thank all of you for coming out today and to echo the Congresswoman again. This is not easy for anyone. The crisis that we're in is a national crisis, and so it touches all of us directly or indirectly. So thank you for just taking the step to come here today. And because you're here, it's really incumbent upon all of us to make your time here worthwhile. So it's my hope that by sharing a little bit about the President's Making Home Affordable program, it'll give you some insights and some help as you move forward. So put simply, the Making Home Affordable program is a program to help struggling homeowners stay in their home and to get into a more affordable mortgage. There are two major components to Making Home Affordable. They are the Home Affordable Refinance Program, also known as HARP, and the Home Affordable Modification Program, also known as HAMP. So before we go any further, I want to give you a website. If you're going to write down any website today, there's going to be some other important ones, but this is a critical one. And that is www.makinghomeaffordable.gov, G-O-V. This is the website that has been put out by the administration through Treasury that gives basically everything I'm going to tell you today is on this website, plus more. So, okay, one more time, www.makinghomeaffordable, that's all one word, .gov. .com also works, so, but that's the site. So first I'm going to talk about the first component, which is the Home Affordable Refinance, or HARP. So the purpose of the refinance is to give borrowers an opportunity to refinance into more affordable loans at today's market rates. Now this is a somewhat limited program because it's only limited to borrowers whose loans are owned by Fannie Mae or Freddie Mac. And to go back to that website again, www.makinghomeaffordable.gov, there is a very user-friendly link on that home page where you can check to see if your loan is owned by either Freddie Mac or Fannie Mae. So that's a really good place to start in this process. It's our hope that this program will reach an estimated 4 to 5 million borrowers who may be eligible nationwide over the next 3 years. So the eligibility criteria for the refinance program, you must own and occupy your residence, and that residence can be a 1 to 4 unit building. You must be current on your mortgage. You must have sufficient income to support the new modified payment. Again, I mentioned that Freddie Mac or Fannie Mae needs to be the owner of your loan. And here's an important one. The amount that you owe on your first mortgage, it's important to distinguish that. Your first mortgage, not your first and second, but your first mortgage is not more than 125% of the current market value of your home. So just to give you an example of that, we'll take an example from a very different part of the country. Let's say you bought your house for $150,000 and you borrowed $125,000 to purchase that house, so you put $25,000 down. And today, that house that was once worth $150,000 is now worth $100,000, and you still owe $125,000. You still would qualify for this refinance program. So, and that's a recent improvement in the program. It used to be a 105% limit, so that should help some more people. Now, obviously, this is somewhat limited too because you have to be current on your mortgage. You cannot be delinquent. So this is really helpful for folks who, like the Congresswoman mentioned, got into a subprime or one of those exotic mortgages when they didn't really need to because they were steered that way. And you just need to get into a more stable, conventional loan product. So the other ways that this is differentiated from other refinancing programs, there is no equity requirement. Again, you can be slightly underwater. There's a faster qualifying process, and it's also generally less expensive as far as closing costs. So the way you would go about looking into whether this is for you is to first use the eligibility tools that are on that website, again, makinghomeaffordable.gov, and then go from there and contact your lender. Also want to point out, this is an important distinction as well, Fannie Mae and Freddie Mac borrowers, you do not need to go to your existing lender for a refinance. I'm sure they would like you to, but just to let you know, there's not a restriction. So if you have a B of A loan, you don't necessarily have to get your refinance from B of A. So that just gives you more options. Want to move on to the Home Affordable Modification Program, or HAMP. The purpose of this program is to modify loans of qualifying at-risk borrowers. And that means either you're in default, or just to take an example that I've seen many times, you've been struggling to make your payments. You've had a reduction in income. A partner has lost a job. There's been a serious medical or life, family status change, and so you've used up all your savings and you're just about to go into default. Or next month your mortgage is going to reset, and you're not going to be able to afford it. So that's what's sort of a critical element here is imminent default. And what the program does is it allows borrowers to stay in their homes by getting into a more affordable modification of their loan, and thereby reducing the impact of foreclosures on the neighborhood. You all have probably seen, and it's actually been even more devastating in other parts of the state and country, the impact of widespread foreclosures on neighborhoods. It's also hoped that we'll be able to reach 3 to 4 million people with this program over the next 3 years. So as far as eligibility for the HAMP, again, you have to be owner-occupant of your 1 to 4 unit property. The amount owed on your first mortgage has to be less than $729,750. Your mortgage has to be made before January 1st of this year, 2009. And here's a really critical part. Your monthly payment on your first mortgage, again, your first mortgage only, right now has to be more than 31% of your gross, that's pre-tax, monthly income. And that's sort of the definition there. That's a threshold of what we call affordability. If your payment is under a third of your total monthly income, that's considered generally affordable. And of course, that doesn't take into consideration other debts that you may have. But strictly speaking to the mortgage, that's the threshold. One thing I want to point out really quickly here, and this is important for folks who may be on the verge of foreclosure. This program, which is required for participation for all banks who have loans owned by Fannie Mae or Freddie Mac, as well as a slew of other banks and servicers who don't have loans owned by Freddie Mac or Fannie Mae, but who are participating in this program, they are all required to consider and assess your loan for the modification program before going into foreclosure. So if anybody here is in that situation and your servicer has not looked at your loan for one of these programs, they need to, and they're bound to do that. So talk with them, if necessary, talk with some of the legal services here. I want to make that very clear.